Hi, you Zangers. I am so happy to tell you that today we have Kenneth with us again. And you know, Kenneth always brings great energy, great thought patterns. I mean, he's really quite brilliant. And so in our last meeting when we were talking, he brought us something that I frankly hadn't thought of in this way. And that's why he's here today. Well, one of the reasons why he's here today. And that is capital incarceration. Right? Think about those words, because of course we're not taught to think of it in that way. But Kenneth, do you want to go into that a little bit more?
Yes, absolutely. So the way that I really look at it is when we look at something like our bank account or something like a retirement account, we see the numbers on the paper and we are led to believe that it's ours. What it really comes down to, though, is when you have restrictions imposed on that wealth, when you read the fine print, when you see what kind of contract you have signed up for with that wealth, it starts to unfold into a different story. Yeah. And it really, to me, the only way I could think of it was it's capital incarceration. They've put a nice chandelier and maybe some nice curtains on the window inside the prison cell. So you walk in there, you think, wow, it sure is nice in here, but it's still a prison cell.
Yeah, that's a really good point. And also what edifies that point as well is that Yale law study showing the string of real ownership, and the legal ownership is up with all of the banks that own Seed and Company, and all of us, we're right down there on the very, very bottom as the beneficial owner. So we think that we own something, but we've really loaned it to the bank or any entity where we've made that deposit. Yeah,
exactly. One way that really kind of brings it to light is when you put a fund or hold some kind of stock in a retirement account, for example, do you hold the actual certificate of ownership yourself, or is it held in street name at a brokerage?
Exactly. It's held in street name. And hey, I became a stockbroker in the 80s. And that was really, up until that point, people held their stock certificates and they held their bond certificates. And so I remember a huge push to get assets in-house. And they would pay me extra if I could talk my clients into them when they bought something to leave it in-house, because then they get to use that equity for as their collateral, and they can borrow and do anything they want with that money.
Yeah, exactly. So when we look at, like you said, that law study, it's that chain of custody.
Yeah.
Who really is the legal owner? Us as the beneficial owners, in a time of relative peace, you know, maybe that distinction doesn't matter so much because you have the illusion of ownership. That's kind of like they give you visitation rights to that wealth.
They pass down the proxies so that you feel like you're voting, right? They'll pass down the dividends. They don't really have to do either one of those things.
Yeah, right. They don't. Yeah.
They don't really have to do it. But if they didn't do it, then you would not feel like you own something.
Yeah, exactly.
Right? And go back to 2008. You know, you were a lot younger then. So was I, frankly. But I remember it very well. And maybe a lot of you out there also remember that. Did anybody go to jail? No. There are still people that are dealing with the aftermath of that financial crisis. It ain't over yet.
No.
They just buried it under a ton of money printing, but it's not over yet. What do you see in terms of what we're talking about today, capital incarceration?
Well, yeah. So one of the things that you've always said too is that was the day the financial system flatlined.
Died.
Yeah.
It did.
Yeah, and they've just been kind of kicking this proverbial can down the road with all the different ways that they've invented money printing. They give it different names. And when it comes to capital incarceration, the real danger that I see with it is because your wealth is stuck inside of this zombie system, right?
Yep.
At any moment, they could use these laws, these contracts that you've signed that you might not even understand the language of.
I'm sure you don't.
Right, on purpose.
Okay,
it's that
itty
way.
bitty teeny weeny, yes.
Yes, to recall that capital, bail-ins. There's also with the FDIC and the Dodd-Frank Act, that hierarchy. Like you said, we're at the very, very bottom of that chain. And what it really comes down to is, like I was saying, in times of relative peace, that illusion of ownership is there. But in a time of systemic crisis or collapse, the term beneficial owner, it's just a fancy legal term for an unsecured creditor.
100%. And I want you to think, because, really, unless you were born after 2008, you actually experienced that. Nobody went to jail, even though what they did was horrific. I mean, it was destructive to the country, to the individuals. It was disgusting and evil, but it wasn't illegal, right? We are not the ones that write the laws. And so if you're somebody that writes the laws, who are you going to write those laws for the benefit of? Somebody that's never gone to likely read it. I mean, think about your mortgage documents that thick.
Yeah.
And you're wanting to close, and they torture you with it, right?
Yeah.
When you need money, they torture you with it. And then it's just, okay, initial. I mean, think about this. So you're signing documents, you have no idea about the rights that you're giving away. And I do want to point this out, because this is something that I've been watching quite closely since 2008, has been the narrowing, the more and more narrow laws and what we can do. I mean, my daughters were away in college, and I used to go in every week and deposit a little bit of cash in their accounts, right? I can't do that now.
Yes, that's very true. I mean, we can see that the restraints are kind of tightening on what you can and cannot do with that capital, because, again, it is incarcerated. So that visitation window, right, is getting a little bit smaller, and we're not even in the full-blown systemic crisis yet.
Yep.
So I think it may be a wake-up call to people when they try to go to the bank to get anything out.
Well, let me tell you, it's not easy anymore, right? They make you feel like a criminal if you want to pull out $10,000 in cash. Yeah. And let's face it, I mean, back in the day, back in the 80s, I could go to the grocery store, and did as a single mom, with $20 to make that bill stretch as far as I could. Yeah. Today, you could go with $100, and are you getting a bag of groceries?
No.
Okay, you're not even getting one bag.
Yeah.
And so, $10,000, that's not really all that much money, but do they not make you feel like a criminal? What's this money for? Who are you talking to? Oh, they're probably illegal. No, you're illegal.
Yeah, it's the wealth management team that wants to sit down with you and are you sure you want to do this? Is somebody telling you to do this? And you're right, they make you feel like it's a problem that you're getting your own money out of the bank. But why is it a problem? Because it's not your money. You have lent it to them, and now they're trying to get you to keep it in there so that their books look better. Right.
Well, their books look better, but they've also used your collateral, right? Your equity as their collateral. So if you pull their equity out, that means that they have to find collateral from somewhere else, which, quite honestly, that's what a lot of this asset-backed securities are, that trying to bring in assets that up to this point completely out of the system, like physical gold, physical silver. They can't use this equity. But if they digitize it, guess what? They get to use that equity too.
Oh, you're right. Yeah, and they can use it right away with the way that this new financial CBDC type system would work with instant settlement.
Yep. So, instant settlement and those smart contracts right on top of everything. No human hands, no human anything in there. Nope. But so where do you see this thing headed?
Well, when we talk about the overall picture of capital incarceration, one other thing that I see is a lot of people have these retirement accounts that they've been working their whole life for. And they, like I said, they look at that number on the statement.
And they think that's theirs.
And they think it's theirs. One way to really look at that is, do you own 100% of that number on that paper, or does the government have an embedded claim on that number as well right off the bat?
Well, they do, and corporations have that embedded claim in anything that's this, because it's just a debt instrument, even though people don't realize it. Federal Reserve note, but you're right. And, you know, I really am glad that I was born in 1954, because I got to see and experience firsthand a lot of this evolution. Right? So that's what I talk about a lot. And when I stop and I think about what was happening in the 70s and the 80s when I became a stockbroker, right? What was happening in the 70s? We were transitioning into a pure debt-based monetary system. Right? And so, they needed collateral, because it's all about growing debt. And today, when you listen to the talking heads on Wall Street, on Bloomberg and CNBC or whatever, it's about everybody being able to have access to credit to take on even more debt, when the debt that's already out there, because you referred to zombies, right? We can't pay this debt back. But that's what the system is demanding. And not only that, Alphabet, did you hear about the 100-year bond they just issued?
No.
Yeah, they just issued a 100-year bond, and at a fixed rate, but we don't know what the rate is. And it was oversubscribed.
Wow.
Like oversubscribed.
For a 100-year bond.
Right.
Yeah, and so...
But think about that for a minute, right? Because this is an advantage that we here in the U.S. have with 30-year fixed-rate mortgages, right? And it is the government's plan all along to repay that debt with currencies that have less and less and ultimately no value at all.
Yeah.
But if they can get that fiat money today that still has a level of purchasing power, and where's that money going? It's going into the AI boom and building out the data centers, which then means that it's going to cost you a lot more for your energy. It already is. And water. Really good point.
Yeah.
And not only that, but there was a structural shift that nobody saw. And that's in all these big tech names that are struggling right now, where they used to be asset light and cash heavy. Cash flow was great. They've shifted that model. And now they're taking on debt like nobody's business. You watch all the mergers and everything that's going. Why? Because they know they're going to not have to pay it back.
Oh, yes, that's very true. The Netflix and HBO one, right? That's a huge one. But yeah,
a huge what? Go into that, because people might not be familiar with what you're
just a
about.
huge merger, yeah. And it's I mean, how many billions of dollars are they talking with that?
In debt.
Yes.
Right?
Yeah.
Taking on more and more debt.
Yeah. So it's a really good point, actually, that you brought that up, because I believe we will see more mergers happening. You're right.
Oh, totally. And there's going to be this massive rush of IPOs, initial public offerings. So coming from the private markets with all these flippin' unicorns, right? These corporate unicorns are worth over at least $1 billion or more, but they have no earnings. And they have no earnings for as far as the eye can see. So why are they worth $1 billion? Because venture capital firms have been willing to borrow, take your money that you invest with them, and then take on more debt. That's why. And
that sounds like, again, capital incarceration, right? Your hard work, your labor has gone into fueling this debt fireball.
Yep.
Yeah. So the thing too that really, when we talk about that embedded claim that the government has of, 20 to 30% in taxation. 20 to 30%. It's more like 40%. Yeah.
Right?
Yeah, it's
Plus
true.
the inflation.
Plus inflation. So you've got this, fees and taxation with that wealth that you don't even own that number that you see on the paper.
Oh, no.
Right?
But it's your perception,
It's
right?
the perception
so
control.
You go, oh, I have $100,000. Well, I don't want to give the government $30,000 or $40,000, right? Guess what? You ain't ever getting away from it. And in fact, because if you don't hold it, you don't own it. This is not rocket science. This is the only wealth that what you see around, tangible, hard assets that you can hold and own outright. Everything else is just a claim. It's just a myth. Yeah,
it is. And the thing about it is that kind of makes the government your silent partner on all that wealth. And
more than that, because they can do whatever they want with it.
Right, with the law that they really can do whatever they want with it. And when we look at the silent partner aspect of that, the silent partner is going broke.
It's a zombie.
This is losing all purchasing power. So the officially. So
not an opinion.
So that silent partner, when they're going broke, do silent partners lower their fee or raise it?
Exactly. But remember, they do not want you to know about it. So I was just reading this morning that Egypt, with inflation rates above 12, official inflation rates above 12%, are very excited because they brought inflation down. You listen to the terms that they're using. Have your prices gone down? No. It's the rate and speed that they have gone up that they're trying to slow down so that you don't notice. Right? But that's all a form of confiscation. And taxation is a form of confiscation. The way that the system is set up with the bail-in is a form of confiscation, and it's all legalized theft. So I love the fact that you brought up that the government is in everything that we do except for this.
Right.
That's it. And even more so, and I know you brought one too, this.
Yep. This is your escape hatch.
It
essentially
is.
Out of that prison cell. I think you have said it the best way that really opened up my eyes to it is this is a once in a lifetime event. I mean, once we get off of this
fiat
currency and we're on that digital, this is representation, but
right. and they make it look like this.
Right. They try to make it seem like, it's gold.
Right. This is the new gold. This is the digital representation of Bitcoin. We don't need any new gold. It's not new gold. We have gold.
Yes, correct. But once we're on that system, there ain't no going back. Never.
No, that's why it's important to fight to get redeemable gold in the system today, because this is the best opportunity that I've ever seen, frankly.
Yeah, absolutely. And just knowing, like you said, everything that's going to happen with this debt-based economy, where you've got these companies taking on more debt and they're cash light, asset heavy. Like you said, that was a pattern shift.
Oh, this is huge, because when the whole debt bubble, the debt bubble has already popped. They did that in 22.
Yeah.
It just takes a while for it to work through the system. But I'm going to tell you, I love it. It's such an easy concept to think about, and true. Truer words have never been spoken. Our capital that we are trying to save for our future, whether it's to educate your children because you've got a small son, make sure that you've got surety. You want the key to that incarceration? Here it is.
Absolutely. This is it,
That's it.
It's so simple, but it's so hard for some people to really.
Well, because they put
understand.
Value in this.
Yeah.
Right? This has no value. It costs if they're going to print a bill, it costs them 9.7 cents to print a $100 bill. Now, when it's all digital, it doesn't even cost that.
No.
And the cheaper and easier it is to make fiat money, as we've seen, the more of it gets made, the less value whatever's out there has. But gold and silver, they have value across the entire spectrum of the global economy. 33 that I could count users of physical gold, 36 physical users of silver. one here, one in these digital representations. I don't know. When you're going into a fight, what do you want? You want a penknife or do you want a bazooka?
Right. Yeah. Full arsenal. And yeah, I mean, I think like we always talk about, the important part is getting the strategy put in place before we see all of this start to unfold more rapidly.
Yeah, but you know, I don't know, because you're on the front lines, you know, talking to clients all of the time.
Yep.
And so are you noticing that people will put a strategy together and then have trouble executing it, or this has gone really easily? People are more open these days. What are you finding on the front lines?
Well, when it comes to capital incarceration, I actually had 2 instances back to back of clients who wanted to protect their wealth and get it out of that prison cell. And they were faced with problems doing that. Yeah, their banks did not want to let that transaction go through.
No, because then it hurts their bottom line. They can't use it as collateral.
Yeah, exactly. Yeah, the one of them, they actually made my client shut down their bank account. He had to open a new bank account at a different credit union, and they allowed him to thankfully do that. But I mean, imagine he had been with that credit union for a long time, he said, and they just said, nope, sorry, you're gonna have to close out your account if you want to do that.
And guess what? That actually even happened to me.
Yeah.
And I won't say which bank, though I want to, but I can't. And I was with them since 2005.
Wow.
You know, and it was like, well, so look, this is real. And anybody that is going to a bank and trying to get what they perceive as their funds out is having this same kind of experience. So sooner you get it done, the better you can sleep at night.
Yeah, very true. Very true. Mm-hmm.
Right?
Absolutely.
Do you have anything else that you want to say before we close out this particular session?
Well, no, just, you know, I think that, as always, Lynette, you just explain it beautifully,
You do a great job too. I'm very happy with you.
I'm learning from the best. That's why.
We're working together.
Yes, absolutely.
Right?
But really, I hope that this just kind of brings a little bit of light to the entire concept of capital incarceration. It's a very well designed system, but like we said, there's an escape hatch.
Yep.
You have the key to get out of that prison cell.
Yep.
And the sooner we do it, the better off everybody will be.
Yep. And just keep in mind too, because not everybody has that choice. If you have like a 403B, you're not getting that money out if you're continuing to work there. Same thing with the 401ks, right? So those funds are going to remain incarcerated, but the whole strategy is, well, part of the strategy anyway, is designed to protect the wealth that you either choose to or have to keep inside the system. The wealth that you choose to take risks with, that's fine. We just want to make sure that at the end of the day, any fees, any losses, any taxes, anything, it is designed as a full circle so that if you're using up your barterable, we're making you whole.
Exactly. Yeah, you are able to be made whole at the end of it all. And that is the ultimate safety net, the ultimate insurance policy.
It really is. Thank you so much for being here today.
Of course.
We have to do this again. I always have fun with you.
Thank you. Yeah.
And for all of you watching, think about that. Capital incarceration. Take back your freedom. And everybody in this whole world, this is our big battle, to get redeemable gold back in the system again. And that means if you don't like what you see the government doing, you can just demand the gold out. And that creates fiscal responsibility and it protects our purchasing power. And until next we meet, I know that if we come together, we can make this happen. We only need 3% of the global population to take our power back. What a concept.
Yeah.
What a concept. Till next we meet, please be safe out there. Bye-bye.